This is Shaumya Sarkar from Wealth Critical. Recently, a lot of clients asked me about the infrastructure fund. Infrastructure is going to be the big theme in India, and we had seen a major setback in infrastructure kind of a funds in 2008. So some people who have actually burned their fingers into 2008 kind of infrastructure fund are still wondering whether they should invest into infrastructure fund or not. Today I'll be analyzing one of the best fund in the infrastructure category is SBI infrastructure fund. India's infrastructure sector is set to become one of the biggest driver for the country's economic growth. It has planned approximately around 143 trillion rupees on infrastructure between 2024 and 30. The focus would be on the sectors such as roads, power, EVs, solar, wind, and renewable energy. So these are the sectors which are coming up and probably will one of the biggest driver of this economic growth. Now, if we look at the Nifty infrastructure index, we can see that approximately there are 30 companies, and the oil and gas consolidate to be the highest one. It approximately having around 31% weightage on it. Then comes the construction, which is 15%, and then comes the power, which is around 12%. If you look at the Nifty infrastructure, it has a right now price to earning is approximately 19.94 with a PB of 3.08. It has a dividend yield of 1.16%. If you talk about the company wise, the Reliance Industries is holding the highest weightage in the Nifty infrastructure. It is having a weightage of approximately 20.27%, while Larsen & Toubro is 15 and Bharti Airtel is 10.99. Now, if I talk about that Nifty infrastructure PB is approximately 3.08 and P is 19.94. It means that they are a bit cheaper at this point of time. They are not very expensive. If we follow the correct correlation with Nifty, it is approximately 0.83%. Now, if I come to the main part of it, that is SBI infrastructure fund, it has approximately of AUM of around 2064 crore as of today's data. Fund has a price to earning is slightly higher than the Nifty index. It is having a price to earning of 30.34 and price to book value is 3.38. While the Nifty infrastructure index is having a price to book value of around 3.08, it is having a price to book value of 3.38. This fund is a very risky, definitely a risky fund, but this fund has a lot of opportunities. SBI Infrastructure Fund is notably having around 47% in large cap, 36% in mid cap holding, and 16.7% holding in a small cap. It is actually covering the multi cap strategy. If you look at the performance index, it has a CAGR of 15.85 against the benchmark CAGR of 13.81. That means it has handsomely beaten the benchmark. If you look at the 1 year return, where it has given around 23.59%, 3 year return is approximately 14.28% per annum, and 5 year return is 16.87%. It is having a Sharpe ratio of 0.53 against the industry Sharpe ratio of 0.44. It has a Shortino ratio of 0.64 against the industry of 0.53. If you look at the average return of this category as well as this fund, you see that average return of this category is approximately in 5 years, which is considered to be the good amount of time to invest the money in infrastructure, is 12.89, while this fund has given 27.28. You can see that almost it has given more than double return in 5 years. If you look at the 2 year category, it has given a category has given a return of 19.68, where it has given a return of 34%. And if it is a 1 year of scenario, it has given a return of 38% the category, and it has given a 59.88% return in 1 year. So if you look at the things that these funds has given one of the best return in the category. Now, why I am comparing it to the 5 years base? Because when you are taking a funds like an infrastructure fund, you should have a long horizon to invest. That means you cannot take this fund for a 1 or 3 months or 1 year kind of a time. You should have a holding of approximately 5 years or more in this kind of funds. So that is the reason that this fund is more of a high risk, high return category. So if you look at the rolling return analysis, which one of the best way to analyze a fund, it has taken 1% risk to generate approximately 2% return in the portfolio. Investors if they want to take a bet on the infrastructure fund, they should think of a long-term SIP or STP mode and strategy of a buying on a dip. This sector mostly depend on the macroeconomic data of the country, so do not take too many risks to into this fund without having your financial advisor. This video is completely made for the educational purpose. We do not recommend to buy or sell or any kind of investment in SBI infrastructure fund without having your own knowledge or advised by your financial advisor. If your financial advisor advises it, then probably it may be a good fund for you, because he or she will understand your risk appetite, your horizon and everything. You should not buy this kind of funds based on any YouTube video, WhatsApp or a email forward. It should be purely based on your time horizon, your risk appetite and your recommendation by your financial advisor. Or if you have expert by yourself, you can take the call on your own. Thank you for watching this video. If you like it, you may subscribe to the channel. We'll come up with this kind of videos on a regular basis. You may share this with your peer groups, this video, and you may subscribe to our channel. Thank you for watching it.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.